Welcome back to Overtime. Tesla, one of the hardest hit stocks in the S&P 500 today. Some negative headlines weighing on sentiment, including reports that the company is delaying the launch of its lower cost Model Y and lowering Cybertruck production. The stock also getting a price target cut at Barclays, citing weakening fundamentals. And tomorrow, we'll get first quarter earnings right here on Overtime. Joining us now is Steve Westley, founder and managing partner at the Westley Group and a former Tesla board member. Steve, welcome. So Tesla has never probably traded on its fundamentals as a car company. So does all of this stuff matter, or does a potential shift in Elon Musk's reputation matter more?
Look, all of this matters. You can't go on forever without showing growth and profits. And look, this is a rough quarter for Tesla, and they may not have hit rock bottom yet. Big miss on deliveries, 337,000 vehicles versus an estimate of 380,000. That's a 13% decrease, and it stands in stark contrast to the rest of the world. EVs grew 29% year over year. Tesla's shrinking 13%. So that's why the share price has dropped 50% from a December high of $1.5 trillion down now to just over $700 billion. It's hard to lose $800 billion in shareholder value without investors getting a little worried. Now, analysts expect a flat Q1, revenues probably $21.5 billion. That could be lower revenues for 2025. And if you want to be valued as a flashy high-tech company, you need the growth to go with it. Punchline, Tesla needs to find a new growth engine soon.
Well, I guess part of the reason I ask the previous question, though, is there are some, including Dan Ives, calling for Elon Musk to return his full attention to Tesla. But I imagine Tesla investors might be wondering, even if he does that, if people's feelings about Elon Musk himself influence their decision to buy a Tesla, to invest in the stock, are we just living in a new reality?
Well, I think, look, for any company, Tesla or otherwise, you need the CEO to be completely focused. Tesla is facing what I call the quadruple whammy. No new product, no date for a $30,000 Tesla. You got a polarizing brand, U.S. sales down 13%. In Europe, it's a whopping 43%. They've got huge competition from BYD and the Chinese. Full self-driving is late. They've paused the rollout in China. I think they need a CEO fully focused on the company. I think if he said he was coming back, share price would go up. But Tesla's bet the farm on the robo-taxi. Right now, they've got to get government approval to get that going.
That's exactly where I was going to go with you, Steve. How much now hinges on robo-taxi's rollout? And certainly Austin seems to be ground zero in some senses around that, especially if you have seen protests and boycotts and increased competition and some of these other things that we know are denting sales.
Look, I think Austin is ground zero, but you've got to remember this. Waymo got its first regulatory approval 4 years ago. That's a long time for Tesla and the others, I might add, to be playing catch up. And, now Waymo already off, moving in 4 cities already, expanding into 10 quickly, new ones coming, Tokyo and international cities in the pipeline. So Tesla's got a lot of catching up to do. I think one of the most worrisome things for me is in China, where BYD is coming out with this new, really impressive $8,000 Seagull. And it comes with the free Eye of God self-driving. Tesla charges $8,000 for their full self-driving option in China. In China, you get the whole car and the self-driving. So that's a lot to compete with. They have to kick it into a higher gear.